Welcome to The Explainer. If you've been scanning the headlines about the Nova Scotia housing market lately, you know there's a ton of mixed messaging out there. Today, we're cutting right through the noise. We're looking strictly at the July 2026 data to give you a clear, no-nonsense look at where things actually stand. Let's get right into it. We're pulling our numbers directly from the Canadian Real Estate Association's latest report. This gives us the full province-wide picture of the actual transactions happening on the ground right now, which should help us answer the biggest question on everyone's mind. Is the Nova Scotia housing market finally cooling down? To figure that out, we really have to look at the tension between supply and demand. We've seen incredibly high temperatures in this sector for the last few years, but markets are cyclical. Knowing exactly where we are in that cycle right now is your absolute best advantage. Which brings us to demand and a real shift in market activity. Let's see if folks are actually out there buying homes this summer, or if they're just sitting on the sidelines. Well, the data shows a pretty noticeable drop. Sales activity actually fell 5.9% in July compared to the exact same time last year. We're talking just 1,075 sales across the entire province for the month. And this isn't just a tiny blip. A near 6% drop literally means fewer moving trucks on the highway and noticeably fewer sold signs popping up on lawns compared to the summer of 2025. But to really get a feel for this shift, we have to zoom out. A 6% drop from last year is one thing, but look back to July 2019. Sales are actually down over 21% from pre-pandemic levels. Think about that for a second. We're seeing significantly less buyer activity right now than we did in a normal, stable year before the 2020 chaos even kicked off. Moving on to supply, where inventory is noticeably on the rise. Because, a drop in sales really only tells us half the story. We have to stack that up against the current supply of homes. And in stark contrast to those falling sales, active listings have completely surged. They jumped 12.3% year over year, leaving 5,653 homes just sitting on the market. So sellers are absolutely still listing their properties, but buyers just aren't snapping them up at the same pace. When you have more homes available but fewer people pulling the trigger, you get a fundamental shift in market dynamics. The crucial takeaway here is that this surge in listings pushes our overall inventory up to 5.3 months. That's a pretty notable jump from the 4.4 months we had last July. For you buyers out there, this means a lot more choice and, maybe more importantly, a lot more time. The frantic, high-pressure bidding wars we've all gotten used to are finally giving way to a much calmer shopping experience. Which brings us to prices, which are finally showing signs of stabilizing. How is this growing tension between dropping sales and rising inventory impacting the actual price tag of a home? When we put the average and median prices side by side, it tells a really fascinating story of a market that's finally catching its breath. On one hand, the average price is $465,412, so up a modest 1.5% from last year. But on the other hand, the median price sits at exactly $425,000, and that represents a very slight decrease of 0.2%. Let's quickly break down why these numbers are telling us slightly different things. The average price can easily be skewed if, say, a handful of multi-million-dollar luxury homes happen to sell in a given month. The median price strips out those extremes, so that 0.2% drop points toward a true stabilization right in the middle of the market. Basically, for the typical family looking for a typical home, prices have essentially flatlined compared to last summer. But we can't forget the historical context here. Even with this present-day stabilization, that average price of $465,412 is a staggering 105.6% higher than it was a decade ago in July 2016. That brilliantly illustrates just how much wealth has been generated in Nova Scotia real estate over the last 10 years. Even if things cool off a bit in the short term, that long-term growth has completely rewired the baseline of affordability in the province. Now, for what I'm calling the townhouse twist. While the broader market is stabilizing, there is one major anomaly in the data that we absolutely need to look at before we wrap up. The data tracking the townhouse market reveals a totally different and honestly kind of wild reality compared to the rest of the province. Townhouses are typically the stepping stone into the market, so you'd expect them to mirror those broader trends of cooling demand and stabilizing prices. But that is not what happened this July. Look at this massive divergence. Townhouse sales absolutely plummeted by over 44% year over year. Barely anyone was buying them. Yet, against all logic, the average price for the few that did sell skyrocketed by 16.3% to over $480,000. It's a complete paradox. Demand fell off a cliff, but prices somehow surged upward anyway. And adding to the confusion, despite that massive price jump, townhouses set on the market for a median of 60 days. That is 4 times longer than just a year prior. It's like an old-fashioned Western standoff right now. Sellers are stubbornly holding firm to high asking prices, buyers are flat out refusing to bite, and the few deals actually crossing the finish line are only doing so after sitting in purgatory for 2 solid months. So will rising inventory finally push prices down this fall? Looking at this combo of shrinking buyer demand and steadily growing supply across the province, we have to wonder if this summer stabilization will turn into actual price drops for the remainder of 2026. Will sellers eventually swallow their pride and lower prices to get deals done? Or are we entering an era of permanent gridlock where nobody wants to blink first? As inventory inches closer to that 6-month tipping point, this fall is going to be a fascinating test of willpower. Thanks for joining this explainer, and we'll see you next time.